If there's a sell-off, is it all asset classes at once? What do you do with havens? What do you do with, if you look at Swissy, if you look at yen, if you look at gold, is there any value to be played there?
So I think if there's a sell-off in markets for whatever reason, whether it's more COVID cases in Europe or the U.S., whether it's lockdown restrictions in the U.S., whether it's disappointment in the election outcome and therefore the prospects of fiscal stimulus, I do think you're going to have a 2 or 3 tier market. Probably equity is going to be hurt the most because they don't have a direct central bank backstop. I think credit is going to be much more stable than it usually is, as stable as it was in September in the face of equity drawdowns, because you do have central bank asset purchases, which are quite geared towards credit markets in Europe and in the U.S. in a way that they maybe weren't before. And then you have the EM currencies, which are probably the most exposed as well because of the lack of sovereign support for a number of these. So that's why I would think about the risky market complex. The havens is always a tricky question because given the low level of rates, there's a limited degree to which bonds can rally. U.S. Treasuries, I think, could rally a bit more in November than they could in September because we're starting from a slightly higher level of rates. But I think maybe 10 or 15 basis points is the maximum there. And Swiss and yen, I think, are still traditional safe haven currencies that work well on a forward-looking basis, simply because the main reason they benefit is the current account surpluses those countries enjoy and the use of Swiss and yen as funding currencies into higher yield assets. So nothing about the structural drivers of those as safe havens has changed, and that's why I think those are still worth holding if you have a sort of a dim outlook on which way the global economy is going to go over the next couple of months.